Ms. Mooney, I think this is almost a perfect segue to Stanley's question and your answer. I sense a missing concept. You've used the word systemic in a vivid way which evokes overview, but as we look at an entire financial system, within it, it seems to me what needs to be articulated is a concept of a public infrastructure, some piece of the whole system that is so consequential that if it fails, it takes down too much with it. But I don't know what the concept would be. At the heart of the system, there are institutions that have become so consequential, not necessarily so big, but so consequential that they have moved out of the private sector into really the public sector. They're part of our public infrastructure. Need to recognize that with that status comes exposure to new regulation. Would you comment?
That's actually a very, very good question, because I think as part of what has played out over the last year, a word we didn't have in our vocabulary a year ago was too big to fail. And there's been a lot of debate around the moral hazards of something being deemed to be too big to fail, and that was part of what was behind the SCAP exams that were done, or the stress tests as they are known, earlier this year. So when you look at some of the proposals that are out there now for the re-regulation of the industry, there is a recognition that there are institutions who are so large and so significant that they either dominate markets or they are so interrelated that if somehow they were impaired, that there is financial systemic risk. And part of the proposals that are currently on the Hill and coming from the administration do include this notion of, should we identify institutions that are systemically significant, who are large, who are correlated, and could cause large harm if they were impaired. I do know there's a lot of talk about the too large to fail is a notion that everybody hopes can go away. It's kind of like religion without sin. You know, you need to have consequences for your behavior, but that there also needs to be a way to identify who those institutions are, and that whoever their primary regulator is needs to supervise and regulate them more stringently. And have more oversight to make sure that their practices, because they could impact a broad array of players, are held to a higher standard. And that is part of the dialogue, that there are institutions who have become so important and so systemically important that there is a burden there to make sure that they're well regulated because the consequences are too severe. And so that is one of the learnings, I think, out of the last year.
We've been in the middle of a healthcare system crisis. This has destroyed families, it's destroyed businesses. What part does this play in our economic recovery, and how do you think this can be fixed in a profitable way that can save us?
Last time I checked, I'm a banker. However, obviously, as part of a broad agenda of change, is healthcare has come into the sights of an industry that is going through re-regulation and a serious national debate about what to do in terms of national health care. I do think there are issues around many Americans without coverage. I do think we have talked for years, and if you look at a timeline, years are getting to be shorter around what are we going to do around Social Security and Medicare, and what are we going to do about a delivery of health care that has increasing costs. Again, I would say much what I said about banking is there are pendulums and there are opinions, and whatever we do, I hope we get it mostly right, because there is the notion that kind of when Humpty Dumpty comes off the wall, sometimes putting pieces and parts and back together and getting back to something that is good is hard. I'm hoping that there are a lot of smart people at the table, and that our own Cleveland Clinic and University Hospital leadership have a voice in Washington, because I think we practice here models that could be national in nature in terms of how to have world-class health care in a delivery form that is both affordable, reasonable, and a good operating model. And when I look at the magnitude of the agenda for change and the things that we as a country do need to touch and address on some manner, and healthcare is on that list, I like I said, why I said the thing about what we do from here and whether all these changes will be good for the long-term economy is where the rubber is really going to meet the road. So I think there's an incredible burden on our leadership in Washington as they undertake this to listen to multiple perspectives, to balance what the issues are, and try and go for something that, A, we can afford and gets it mostly right.
Your talk touched on so many points, it's really difficult to come up with any one question. But let's try to talk about the basic causes. You've used the term systemic, you've talked about subprime and so on. There probably aren't 1 in 1,000 people who can really define any of those. Subprime, the only thing that most people can say is you never lend the total amount that a house sells for. Other than that, you probably can't describe it. It has to do with a lot of fraud that took place at the lower levels, such as appraisals, such as falsifying income, falsifying the number of homes that someone was buying relative to that income, whether they could afford it. In other words, credit judgment. When you talk about getting back to basics, think about Fannie Mae, Freddie Mac. 2 years before they really collapsed, it was known that they were putting on paper that was totally unacceptable. They were raising the advance amounts on loans, which I currently think is now up to $700,000. I think they'll buy paper up to that level. They raised the levels so fast that almost anything could qualify for any amount. So the question I have is, how are you going to get back to the basics of good, honest evaluation, credit judgment that regulation can't possibly find?
Well, some piece of, and subprime, let me start with the notion of what is subprime. It is loans that were made to borrowers who, on average, weren't qualified on terms and conditions. If anybody remembers buying their first house, 10 or 20% down, and if you didn't have 20% down, you had to buy private mortgage insurance. A lot of that went out the window, and part of my statistics were to show that it really accelerated in the period from 2000 to 2006 when they created a way to package up mortgages and make them into a bond and sell them everywhere. And I think with the government, Freddie Mac and Fannie Mae, we need to get back to people have to prove their income. You're going to have to come up with a W-2. You're going to have a down payment. You've got to prove that you have the income to make the mortgage payments, and get back to basics on mortgage lending. In my view, is not so very hard. It worked for a century plus in very good terms, and I think all of us kind of grew up knowing what it took to buy a house, and then all of a sudden, some of the impetus was to make housing more affordable for people of lesser economic means, and it became a freight train of abuse. And one of my favorite statistics is in Ohio. I mentioned about how mortgage brokers were paid to go generate mortgage loans, package them up, send them to a Wall Street firm, that they packaged them up, a rating agency looked at it, stamped a credit grade on it, and like I said, they end up in Narvik, Norway, where the sun doesn't shine for a month out of the year, and all of a sudden that town wakes up and finds they don't have any money. I think some piece of what you have to do is step back and realize that the brokers, for example, part of why this regulation piece isn't perhaps as easy as it looks, in Ohio, mortgage brokers were regulated by the state, and there were virtually no qualifications. Some states you have to take a test, you have to be certified, you have to have continuing education requirements. Here you filled in a form and you were a broker. 25% of the mortgage brokers in the state of Ohio in 2006 had a record of being a felon on their records.